Hey, what's up, swing traders? This is Jay checking in with you with another week of market analysis. So this week, it's kind of interesting, isn't it? The last week we have the ISM failing, expectations spectacularly, and then on Friday we have the NFP, which is coming in at very, very disappointing numbers. And yet on Friday, the whole mass market, the broad market just rallied back. It's like, what the hell is going on? I have no idea, seriously. So before we go and talk about the market for this week, right, let's look at what is coming on the next week. So next week, on the horizon, what do we have? We have a pretty data heavy week to start with. On Monday, we have the Fed chair. Powell is going to speak again. On Tuesday, he's going to speak again. On Wednesday, he's going to speak again. So this week, Monday, Tuesday, Wednesday, he is going to speak. But I think what everyone is waiting for is the FOMC meeting minutes, which is coming on at 2 p.m. Eastern Standard Time on Wednesday. So the market is currently pricing in a 25 basis point cut. And if they do not cut, I would expect the market to behave really violently. To which way, honestly, I have no idea. So I've gave up predicting which way it's going to go, because more often than not, well, it just tends to surprise me. At first, it will go my way, and then after it reverses, or it will go against me, and then after that, come my way. So I am going to keep a tight watch on this 3 days, and the market, I think, after dust have been settled, I think Thursday will be a very nice day for day trades. Monday, Tuesday, Wednesday, day traders, please be careful, because you may get into those wild swings, and especially during near the time of announcement, which is 1 p.m. Eastern Standard Time on Monday, and 1:50 p.m. Eastern Standard Time on Tuesday, and Wednesday, it is almost the whole day. It's like 11 a.m. all the way to 2 p.m. where the FOMC meeting minutes are announced. Right, so now looking at the price front, right, let's go and look at S&P 500. So I tend to always compare between the S&P 500 and New York Stock Exchange Composite. So what are the differences? Well, the S&P 500 are the 500 companies that usually they are large mega companies. They are selected by the Standard & Poor's 500 to represent, as an index to represent the US market. So the New York Stock Exchange, on the other hand, is a composite index of the stocks that are listed on New York Stock Exchange itself. So this consists of all the mega companies all the way down to the small mid companies that are listed on the New York Stock Exchange. So if you compare between these two, right, you can see that the shape is slightly different, the behavior is slightly different. So what you can see here is that in this second rally over here, in the September to October rally, you can see that the mega companies, the big companies, they are the one that is leading the charge and trying to break the previous all-time high. And on the other hand, if you look at the New York Stock Exchange Composite, what you're going to see here is the smaller companies, the medium companies, they are lagging, because the previous all-time high was at 13,200, and this rally in September to October, well, it came nowhere close. It is not even pushing it. So given the drop over here, you can see that the rebound on Friday, the small medium companies, they are not as strong as well, because they barely struggled to cover the gap. And on the other hand, if you look at the S&P 500, you can see that the gap was closed more convincingly, right? So now you can see the difference. So I tend to always cross-check between the two to tell me what are the mega big companies doing and what are some of the broad market doing, okay? So that is on the S&P 500. If you're looking at turning points, if it goes up, the first thing is going to get rejected at 2960. I expect some reaction over here, because this is the monthly pivot level. And if it's going to break up, all right, if it is going to break up, let me bring back my drawings. If it's going to break up, I expect, okay, so this level to get rejected first. Then if it breaks up, then I expect a retest and then proceed to test the all-time high again, which is at 3020 all the way to 3040. So it's like this box over here. So the target is never like, right down to the decimal place. It's always a zone. And this is what I have for the S&P 500 if it goes up. On the other hand, if it comes down, all right? So there's equal chance that, it will just rally, hit here as a resistance, then come back down, retest the S1 level, which is now here at 2900, and then come back down here. And this is where I would like to see buyers coming in to hold the prices. If not, this uptrend is precarious, man. It is probably going to be over. And why am I still bullish? If between the bullish and the bearish, which one am I looking out for, or which one am I leaning out to? Well, since the start of this year, you can see if I connect all the mega swing points together, you have a upswing, and then a swing high, swing low, correct? Followed by a higher high, higher low, and then now is a lower high, but still a higher low. So this goes to say, right, this uptrend, there is still some hope. It is going to hold if it holds. The last thing I want to see is it breaks below the previous low over here, and that will constitute a change in trend. So right now, this is a type 2 trending market, not the easiest to trade, but we are getting some decent, pretty good range over here. And this is the reason why I am preparing myself for 2 scenarios, and I'm going to watch like a hawk of how prices react at this level in this coming week, 2960. So how do I know whether prices are turning? This is always a question that traders will ask me. Well, think about it this way. I'm sure you have crossed the road before, yeah? So when you see the green man, which is in your favor, you're supposed to cross. But when you see a vehicle that is coming, do you ignore the vehicle and then just look at the green man and cross? I'm sure you don't. And I hope you don't. All right. So when you are going to cross the road, although the green man says, hey, this is your turn to cross, this is your right to cross, but at the end of the day, you still have to go and check for the vehicle slowing down. If the vehicle is not slowing down, I don't think you're going to jump in front of the vehicle and say, hey, this is my right. Please don't do that. All right. So if you see the vehicle slowing down, that is your sign to cross the road with the green man. All right. So when it comes to prices, when it comes to the technical charts, what is the car? Well, the car are the prices, and the support resistance, those are the green man, red man. So if it reaches the green man, by right, it reaches the pivot level. If it is supposed to turn down, then I'm expecting a slowdown in prices, and I'm expecting to see the indecision candles popping all over the place. Okay, so when I start to see that at the key level, it will give me an idea that the prices are going to reverse down. Okay, so this is on the S&P 500. Let's head over to the Europe side. So on the Europe side, well, charties will kind of tell me this is a shoulder, this is a head, and then this is another shoulder, and this is a triple top. Yeah, I got it, and that's why you can see, that's why you see the prices come down. I'm like, oh, okay, sure. So, well, it does look like the prices are coming down, way more bearish than the US. So where is it going to go? I do think that first thing first, if it comes down here, it's going to come down all the way to this key area over here, which is about 11650. So if it comes down, this is the level that I'm watching to, for the prices to slow down. If it doesn't slow down, then I will expect further downside. So this is if it comes down. On the other hand, if it goes up, well, if it goes up, I think this is less likely, because looking at the chart over here, I'm watching this break first, probably a retest of the S1, which is at the round number 12,000, and then head up towards 12,200 for the coming week. So this is on DAX. If it goes down, this area must hold. If it goes up, I want to see it break above S1, retest, target at the pivot. Okay, 12,200 thereabouts, whichever comes first. So this is over at the Europe side. Now coming over to Asia, this is Hang Seng, and how spectacular Hang Seng is. I'm sure you have read the news. You know about ongoing protests that is on the streets, and it's crazy. And personally, I don't think that's a protest. I think that's a rampage. Now it's senseless. As long as they don't agree with certain group of people, they will just beat them up. So now it's lawless. It's a lawless, crazy society. And of course, if you look at the market, a high of 30,000 sometime about 5 months ago. Right now, severe downtrend, and it has come to a low of 25,000. So that is a 5,000 point drop out of 30,000. That's crazy. Man, this is really, really crazy. So without a doubt, you have a swing low, swing high, and then after that you have a lower low, and then a lower high, and now it seems that on a broad structure it is definitely going down. However, do you see this huge outside bar over here? So this overlapping consolidation zone over here finalized by an outside bar on Friday session. Yeah, you see this? So usually when you see an outside bar, it terminates a trend. Okay, so this one is in a short-term downtrend. I am looking at this outside bar being terminated. Just so happen, I'm looking at this outside bar terminating the downtrend. Just so happen that it coincides with this trend line over here. So I'm expecting prices in this coming week to bounce up, retest the 26,250, and then see if it can break above, do a retest, eventually coming to where my trend line is, which is around 26,800, somewhere around there. So am I bullish on Hang Seng? Am I bullish on the Hong Kong economy? No, I don't think the economy is going to do well. And this is nothing more than dead cat bounce if it does goes up. So on the other hand, right, if it comes down, where is it going to go? Well, if it comes down, no brainer, is definitely going to come down to here, 25,250, because this was the previous low as well, coinciding with the monthly S1. So if it goes up, I think it's going to be a dead cat bounce. Eventual target 26,800. If it comes down, 25,250. So this is the range that I'm looking at for this coming week in Hang Seng. Then over to Singapore, over to here in Singapore, you can see that the STI is pretty, well, like luster. It is not going anywhere. This is pretty much like a type 4 sideways consolidation market that is trapped within 3,000 and 3,400 for the whole of this year. In fact, since August, since July last year. So you can see that prices are definitely making a lower low. So swing high, swing low, then after that, lower high, and then I think that it is going to form a lower low over there. So what is the level I'm looking at? I'm looking at a 3060 level, which coincided with this monthly S1 and my long-term uptrend line. So I'm expecting prices to drop, do a bounce, probably retest this gap, and then if it's going to break below, okay, then it's going to come down and eventually at the round number, which coincides with the S2 3,000 level. So am I bullish on the Singapore market? Nah, definitely not. I'm not going to be bullish on the market like this. That looks like this. All right. So that's on the major global markets, the stock markets. Let's go over and look at precious metal. Well, in this precious metal over here, you can see that gold has been tremendous, has been crazy ever since breaking out of the 1,360 level. And you can see that it's consolidation, break up, then after that consolidation again, break up, consolidation again, then after that finally break down, and now it is seemingly showing me a change of trend. So what do I mean by this? Well, let me just join up the trend line. You will be the swing points you'll be able to see. So you have a swing low, okay, then goes to a swing high, higher low, higher high, higher low, higher high, then after that lower low, lower high, lower low. So can you see that gradual change over? So if there is anything, right, you can also call this as a head and shoulders pattern. So this is a shoulder, that's the head, that's another shoulder, right? So in fact, head and shoulder pattern, it is simply just the trend changing over. You have a lower high, a lower low. So I'm expecting somewhere that the prices are going to get rejected down this angle, okay, which is somewhere close to there. I do think that prices is going to get rejected and then come back down again, and to where? Eventual target 1,480, which is somewhere around this area over there. So in the coming week, I do think that this is going to happen. In the event that this doesn't happen, then I would want to see a breakout of this trend line, hit the R1 or not, come back and retest before or after hitting the R1, that's fine, and then going up again, testing the all-time high 1560. But based on the price, I do think that the downside is more probable than the upside for gold, okay? And then now next thing, lastly, we have the commodities. So on the commodities front, well, this was where the news hit, you know, when the Aramco Saudi's facility was hit, was prices did a knee-jerk reaction all the way up to $62. That's more than a 10% jump. And finally, you can see after the dust settled, people realize that, hey, it doesn't look so bad. So what happened now is prices starts to come back down to usual again. And right now we are at a contentious point where you can see that prices are supported here at a very, very key level over here. So, well, what is one action to take over here? If you are trading on a bounce, I think yes, you can. Where's your upside? Around $56. So I think that's where the upside is for gold. And if further downside, I'm expecting the round number 50 to hold. And linking up this trend line over here, if it doesn't hold, then 46 level should hold. Okay, so how am I going to take action of this? Well, if I were you and knowing what I know, then I would actually sell a put option over here, because right now it's at a very, very good area. I would sell a put option, a put spread, and then collect the premium with a slight bullish view on gold, or on oil. All right, so this is what I have for you across the broad market in this week. So in the next week, I'm going to continue with the analysis, and I will do some review of what we talk about this week. So stay tuned. Remember that next week we have the Monday, Tuesday, Wednesday, the heavy data days that I think if you are day trading, you should be aware of them, at least the hours or the timing that they're going to be released. Okay, so trade safe, and I will catch you next week.